number one is asset allocation. And what is your asset allocation required to be based on your risk appetite? So everyone has a different risk appetite. Everyone has a time frame or an investment time frame. And as I said before, everyone has different goals. And then once you understand that, then you will build an asset allocation to support those goals and help you along the journey, and make sure you're always safe. And you're not always safe, but make sure you're as defensive and you defensive and offensive. So, you've got Australian shares. Marty mentioned the US stocks before have taken a bit more of a hit. You've got bonds, you've got gold, you've got property, and you've got crypto. Now, these are all assets that you can be invested in, and depending on your risk profile will depend how much money you've got in each of those assets. So understand what your ideal asset allocation should look like in line with your risk profile and what your plans are. And obviously you can get advice on this. The other thing to mention is the buffer, and do you have a buffer, and what does it need to be? So if you've got someone that's heavily invested in crypto or heavily invested in a tech stock that's taken a real hit, as long as they're confident in that investment, if it's crypto, it might be Bitcoin or Ethereum, you don't necessarily want to pull out of that because you're really confident in the business or the investment. So don't be in a position where, we're in May 2022 and the market is crashing and you need to start selling that stuff down. So do you have enough cash surplus to get you through? I would suggest a 6 to 12 month period. That's what I generally speak to my clients about, because the market will generally recover within that period. But you just don't want to be left having to sell down and having to crystallize a loss. So understand what your buffer needs to be. Spoke about purpose, and just be careful following the herd. And I think that's a lot of what's happened lately. So many people were invested in crypto without a real understanding of what it was, outside of the fact that their mate was investing in it and had made, 3x in the last 2 weeks. So, geez, I should do that as well. That's all good and well, but how much are you putting towards that, and understand the implications of, what if it goes backwards, which is what we're seeing at the moment. So, yeah, for me, back to basics, back to a financial plan. Crypto can be a part of that. Risky assets can be a part of that, but understand the defensive, and understand, what would you do if you did lose 40, 60%, 80%, Terra, 100%. So, yeah, just back to some real basics and fundamentals of financial planning and setting goals.